This is your LMAX Exchange technical update for Wednesday, June 28th, 2017. Eurodollar. So we had warned in our analysis that while the euro was looking like it could potentially be topping out for a more significant correction, the market would need to break down below 111.10 to confirm. Inability to break down below 111.10 kept the immediate pressure on the top side, and we've since seen this push, this acceleration, this explosion up to fresh 2017 highs, which now puts the market testing that next key August 2016 high at 113.67. But technically the break above 113 now confirms the higher low at 111.10, and after seeing this consolidation between the 113 to 111 area, there's room for this to extend 200 points up towards 115, which takes us up into longer term resistance in that 114 to 117 area. And so the focus now is on the 115 handle and that longer term resistance up towards 117. At this point, we would need to see now a break back below 111.10, which becomes more significant as a level of support to take the immediate pressure off the top side. Sterling dollar. So cable has rallied back up after the market had traded down below that previous resistance, that range peak at 127.75, but overall the market's not really going anywhere at the moment and could still be very well capped into rallies ahead of another major downside extension back towards the 124s. Ultimately though, the breakout that we saw in April above 127.75 was a significantly constructive development, suggesting a longer term base off that October plus 30-year low at 118.40, that October 2016 low, and so this opens the door over the medium term for a push up towards the next measure move extension in the 135 area. Dollar yen. So dollar yen has taken out some short-term resistance that had been in place at 112.13, and this takes some of the pressure off the downside, though as we've been saying in our analysis, overall the downtrend still remains intact while the market holds below 114.37, and there's risk for another topside failure and resumption of declines that could take us back down towards that 2017 low just shy of 108. So don't be getting too sucked into this bullish breakout at this point. With a break above 114.37 required to really force a shift in the structure, look for rallies instead to potentially once again be well capped despite this break above 112.13. Euro Swiss. Euro Swiss continues to consolidate a little bit in recent trade, but overall the story here is a market that is stalled out ahead of a critical psychological barrier at 110, which also represents the shift between a ongoing bearish price action and the possibility for a structural shift to the top side, setting up longer term upside momentum in this market. But while the market holds below 110, the overall pressure remains on the downside, and there's risk for continued topside failures and for a resumption of declines back down towards critical support just ahead of 106. Aussie dollar. So as we had cited, there's significant resistance that was in play just over 76, and the market has once again stalled out into that 76 area ahead of what could be the next major downside extension. Look for a break below recent support in this market, which comes in from that low that we saw on the 22nd of June at 75.35 to strengthen this outlook and accelerate declines potentially back down towards the multi-day lows that come in around 73.30. Only back above this recent high that we saw around 76.35 would compromise the bearish outlook for Aussie dollar at the moment. But again, short-term support right now, the focus is 75.35. Dollar CAD. So dollar CAD has broken down some more after the market had looked like it was consolidating and maybe wanting to resume the broader uptrend, but instead we've seen the breakdown below recent support that was in place at 131.65, and this does open the door for the possibility of a test of the 130 psychological barrier over the coming sessions. Overall though, our view is that while the market holds above 130 on a close basis, there continues to be risk for the market to be very well supported in favor of a bullish resumption. But right now 133.48, that high from the 21st of June, is the key level to watch and the one that needs to get broken to the top side to take the immediate pressure off of the downside. Kiwi dollar. So the New Zealand dollar took some time, but it's finally stalling out into this critical resistance zone up above 73. We had seen a 2017 high already in place at 73.76, and so this topside failure suggests that the market is exhausted, but we will need to see a breakdown below some key support on a short-term basis at 71.85, which will strengthen the bearish outlook and accelerate declines back down towards those 2017 lows at 68.18. Ultimately here, only above the 2017 peak would force a shift in what is still a bearish outlook for Kiwi dollar. SPX 500. The S&P 500 has rolled over a little bit, but overall, while the market holds above 2400, the risk still remains for this market to be supported on dips in favor of that next move towards a measured move extension at 2480 further up. This follows consolidation that we'd seen between 2400 and 2320, 80 points earlier this year, projecting that 80-point move to 2480 on the break of 2400. But if we do see a break back down below 2400, it will take away or alleviate immediate topside pressures, suggesting that the market could be finally looking to roll over a bit. Ultimately, we would need to see a break below 2320 to force a more significant structural shift in this market. Gold. So gold has been very constructive over the past several months, putting in higher lows and higher highs, with dips being very well supported in 2017. And so this latest round of setbacks is once again expected to be supported ahead of the next major upside extension back through the 2017 high at 1296 and towards the 2016 peak at 1375 further up. Only back below 1214, that low that we had seen on the 9th of May, would compromise this outlook. And again, any setbacks that we do see from here should be very well supported, ideally in the 1230 area.